Welcome to today's Oxford Executive MBA faculty discussion. My name is Alejandra de Rojas, and I'm a recruitment manager for the Oxford Executive MBA program. It's my honor to have one of our world-class faculty members, Nir Vulkan, with us today, who will be discussing the latest advancements in AI and the likely impact across the financial sector. Before we begin, I wanted to use this as an opportunity to give you a brief overview of our Executive MBA and some of the key aspects of the program. Next slide, please. At Said, we have two intakes per academic year, one that starts in January and the other one in September, with each intake typically consisting of around 70 students. In terms of the format, students are required to study for a duration of 1 week at a time, usually Monday to Friday with occasional weekend classes. It is a part-time program and it consists of 16 to 18 week-long modules, depending on your choice of your 4 electives. These run approximately every 5 to 6 weeks to fit alongside your work commitments, and it takes around 2 years to complete the full program. All students complete 13 core subjects, and you can then have a choice to select 4 electives that will give you the opportunity to tailor your master's to suit your motivations and areas of interest. We also offer international modules, which take place in Asia, Africa, North, and South America. Next slide, please. Now, just to give you an idea of your own timeline, as I mentioned before, we have 2 cohorts per year starting in September and January, and we always advise you to apply early. The sooner you apply, the better, in order to guarantee 1, a place on the program, 2, secure funding, and 3, have a wider choice of colleges. Quickly, to go over the deadlines, we have a list of deadlines that you can see here. We generally have 5 stages of deadlines associated with each of the program intakes. For the September 2024 intake, you're still in time to put in an application, as the final deadline is on the 15th of July. But please don't wait until the last minute to submit your application. If you're looking at January 2025, you can also start applying now, and here you will find the upcoming deadline rounds. Next slide, please. We have a number of EMBA scholarships here as well, like the EMBA Director Scholarship, the Women's Scholarships, Hashmukh Patel, and the Oxford Alumni Scholarship, to mention some of these. So do have a closer look at our website to find out more information. There are also external scholarships, and one useful place to look is at the Oxford University website, which has over 1,000 different scholarships available. There will be some applicable to the Oxford Executive MBA, so certainly worth taking 2 minutes to use the scholarship finder. My colleagues will kindly now share more information about all those dates and different funding options on the chat box. If you want to find out more, please reach out to me or my colleagues, and we will be more than happy to further assess you. Again, my colleagues will share more details about that up in the chat box. On that note, if you have any questions for the professor or the recruitment team, please use this function. And now, let's move on to our main section of this session. Let me please hand it over to Professor Nir Vulkan. Thank you.
Thank you very much, Ali. There's a couple of people, I think, raised their hands, so I guess these are questions for you. I don't know if you want to take it now or at the end, Ali.
Please use the chat function if you have any questions.
Yes. So guys, the guys who raise your hands, I suggest you use the chat. And if it's, I'm guessing at this point, it's an admission question, so you can use the chat box. Welcome everyone. I see there's a lot of you, so I'm delighted and to be here with you. I'm Nir Vulkan, and I'm a professor of business economics at Said Business School. And this is a taster section for my elective, my EMBA elective. It's also a full-time MBA elective, and it's called FinTech and AI in Finance. So what I'm going to do is speak a little bit about me, a little bit about the elective, and then I'm going to do well, a little bit of the lecture of what we do there. So hopefully that will give you a taste of one of the electives, at least in this course and this program, which is the EMBA program. I have to say, because Ali was mentioning, I've been teaching on it for pretty much since it began, and it is a great program. So I do hope you will you will consider. So I'm Ahmed Saeed. I'm also a fellow of Worcester College, and I'm going to do something I shouldn't, but I'm going to try and show you the beautiful Worcester College, where I am now. So the background behind me is just a wall, but there's lovely pictures here. But anyway, Worcester College is one of the many beautiful old colleges we have here in Oxford. So it's a real special place, and I hope you get to visit it at some point. It really is a very special university and a special experience. Okay, so let me start a little bit about me. So my interest, my research interest for years have always been in the, if you like, where finance meets tech. And it sort of reflects my own personal background. My undergraduate degree is in maths and computer science, and then I did my PhD in mathematical economics and in finance. And really, this is kind of what I do for my research. And when fintech started being a thing after the financial crisis 2008-9, and we decided to teach a course on it, it was kind of natural that this is what I was going to do. So I'm a career academic. I teach in the business school. I do research. That's what all the professors do. But I also worked in industry. I worked with hedge funds for over 20 years. 20 years? 22 now. God, I'm getting old. And I do something called algorithmic trading. Algorithmic trading is basically using computers to decide how to trade. And hedge funds have been involved in that for a long time, since computers became a thing, really. And I've been lucky enough to be part of that. And it's funny because now we talk about AI in finance, and I'm going to talk to you about it now. And in many parts in finance, this is completely new, particularly in retail finance, in the finance that every day that affects us, consumers. But with hedge funds, this type of thing, AI, or if you like more generally, computers making decisions, have been happening for a long time. The reason it's happening there for a long time is because it's regulated differently, or less regulated, if you like, and therefore we were able to do that for a long time. So I kind of know both sides, or if you like, the practical side and the theoretical side from academia. And the last thing I'll say about me before I talk about the course is that I chaired a committee for the EU. So the EU, like many other governments around the world, are really concerned about AI, and they came up with general principles of what they call ethical AI or good AI. And what they did is they then set up a number of committees to tell them, what does that mean for specific industry? And I was the chairman of the Banking and Finance Committee. So our job was to advise the EU what kind of new regulation is necessary in order to ensure that these technologies are used in a, if you like, in a good way, and sort of to minimize the risks associated with it. So towards the end of this lecture, I'll mention some of the things that we came up with. So we came up with this big report, which you can find online, and whether the politician actually use it or not, that's a different question, but we have tried. So that's my own background. If you're interested in the hedge fund thing I've mentioned, we actually have an online program, an executive program in the business school called the Oxford Program on Online. The Oxford Online Program on Algorithmic Trading. I can't speak, and which I've created, and you're welcome to look at it. This session I'm going to do, the short session I'm going to do today, is related to my elective FinTech and AI in finance. So we started that in 2016. It was the first ever program in the UK on fintech, and we think it may have been the first in the world. So we're in competition with MIT. They have launched something roughly at the same time. I still think we were a little bit ahead, but I guess it's difficult to do. But so we've been at it from early in the early days. We just called it fintech. We now call it fintech and AI and finance for the obvious reasons that that's the kind of part of tech that's really most relevant now to finance, to the changes in finance that are happening. The course is a little bit like what Ali mentioned, the international elective. So it's an international elective in London. So there's a big political debate. I don't know how many of you are from the UK now. Don't worry, I'm not going to go into politics, but there's a big political event, political thing is whether London is part of the UK anymore, or is it gone to be something different? And but anyway, we call it the international elective in London, and we spend a week in Shoreditch where it all happened. Now, without too much details, I'm just going to say that, you know, in general, Oxford punches above its weight when it comes to the city and to finance. But even more so when it comes to fintech, it's incredible how much Oxford punches above its weight when it comes to fintech. So many of these, they're not startups anymore, but you know, the companies that used to be startups, some of them are public companies, some of them are with billions now, were started by Oxford alums. Many of them are actually SBS alums. Some of them are my former students creating companies based on projects that they have done with me. We have something in this program called the EP, the Entrepreneurial Project, and a couple of these companies came out of EP projects that I supervise. So obviously, it's all the success is because of me. The only reason. Okay, that's not true, but nevertheless, we do have a lot of students and involved as founders, as executives of these companies. So we take advantage of that by going to London and spending time with them. And so we hire a room in Shoreditch near Finsbury Square, if you know where that is. And we either go visit them or they come to us, and we get to see kind of fintech from all its different sides. We talk to the regulators, the FCA. We talk to obviously the companies themselves. We also talk to the banks, retail banks and investment banks, and how they think about it. We talk to investors as well, fintech investors. And so we're going to see from the different views, kind of get a complete perspective of how all that works. So yeah, so that's the elective. And this, sorry, it's a very long introduction, but this sort of gives you an idea of where I come from and where this session come from. All right. So this is a long introduction over with. Let me get directly into what we do in the course. So we're talking about AI in finance. So I am going to ask you, there's many of you, but to use the chat function, and I'm going to put it on now, and to tell me what is finance about in 1 or 2 words, if you can, or 3 words. If you have to explain to someone, what is finance about? What do we do in finance? Please go ahead and put this in the chat. While I drink my water. Okay, stop. Stop. I'm not going to be able to deal with all of that. Thank you, everyone. Thank you, everyone. There's tons of answers. So I am going to, wow, this is fantastic. So thank you. I guess you can see it as well. There's a couple of themes coming in. Obviously, one is money. One is sort of managing money, managing flows, how it works. Someone said blood. Management of money, adding value, dealing with numbers. That's an interesting one. I'll come back to that. Acquisition, analysis, money analysis. Finance is the basis of economics. That's interesting because we normally in academia think otherwise, that economics, this finance is a subsection. Moving money, making money, investing, that's an interesting one. Management of value, creating money, accountability and funding, value. Wow, movement from currency, trade, time value. Wow, I'm gonna. This is more. Sorry, there's a lot of you. Management, value management. I wish I knew. That's a really good answer. I wish I knew what finance was about. Sometimes I feel like that. Investing, anything, money, understanding return on investment, and so on. Okay, let me take some of these things, and let me say broadly, when you ask these questions, when I ask this question in class, and I do it all the time, the people who don't work in finance say it's about money. Yes, and it's true, finance is about money. But if you talk to people who work in finance, you realize it's really about more of the management, or people say about the maths, and about the budgeting, and about the accounting. And if you look at all these things, you think, what does it call? It all comes from the fact that in finance, if you like, money has two dimensions. So we call risk and return. And return is how much you make, and the risk associated with it. And actually, if you kind of look a little bit detailed into the everyday working of finance, it is really about risk, about understanding, for example, investment, where risk, what kind of risks they are, trying to measure these risks. So for example, if you are deciding where to allocate money between different investment options, you need to know the different risks. Or if you are giving a loan to someone in a bank, you need to understand the risk of them paying back or not paying back. In certain situations, so you understanding what risks are there, trying to measure these risks, and then there's something called pricing the risk. So for example, if you are Goldman Sachs and you give, so if you're a bank and you're giving a loan to, I don't know, to Jonathan here, you kind of say yes or no. Yes, so you look how risky he is, and if he is below a certain threshold of risk, you say, fine, I'll give you the loan, and if he's above it, you don't give it to him. If you're, I don't know, Goldman Sachs, and you're giving a loan to a huge, I don't know, supermarket chain in Kenya, who are expanding, again, you work out how risky it is, but what you do is the riskier they are, the higher rate you charge. And maybe if it's really risky, you say no. If it's too risky, you say no, but there's a whole range where you, and that's called pricing the risk. So you're trying to price the risk. And so the everyday business of finance is largely to do with risk. And where does risk come from? Risk comes from something called, from us not knowing. Risk is a measure of us not knowing. But this is, if you like, exactly the area where AI and technology in general can really change things. And let me give you an example. So you decide, let's go to the simple scenario. So I picked on Jonathan, I don't know why, but any person walks into a bank and asks for a loan, I don't know, to buy a car or so on. What the bank does is a certain estimation of how risky, what are the chances that this person will be able to pay back or not, and based on some kind of matrix says yes or no. And in the past, this was largely based on the past transactions of that person, which meant anybody young or new, you know, you just moved to this country, automatically the answer is no, because you're too risky. And sort of that makes sense. So you use the past information to make a prediction of the likelihood of the risks associated with that. But what if you say, look, but I'm a good person. I will pay you back. The bank says, well, you know, we'd like to believe you, but we don't know you. And you say, oh, but here, you may not know me, but let me give you this. this knows me better than my mother knows me, better than my wife knows me. Here, I'll give you permission to look into this. And this will prove to you that I am I'm worthy of the risk. It sounds a bit like a joke, but it isn't. So one simple example of that is, you know, there is a personality theory, the Big Five. Maybe some of you have heard of it. So it's a very common, very heavily used theory of personality, which broadly states we all have personalities, and they can be expressed as along 5 dimensions. Yes. And one of these dimensions is how conscientious we are. And it turns out there's plenty of research showing that conscientious people tend to pay back their loans. Yes, conscientious people tend to pay their loans. So you think, actually, I'd like to know, it's more important for me as someone who gives you a loan to know whether you're a conscientious person or not than to look at, you know, your bank account for the last 5 years. And it also turns out that this phone does actually know whether I'm conscientious or not. And it knows a lot of information about my personality. And in fact, it's really easy to deduce things like conscientiousness level and other personality traits from what we call the digital footprint. The famous example, maybe I should say infamous example, is the Facebook likes example. You may have heard about it in voting in elections. This is the Cambridge Analytica scandal of almost 10 years ago, where they used Facebook likes. At the time, Facebook likes were public, and to deduce what your Big Five scores are. And it turns out it was really accurate, because through your likes, you're revealing something about yourself, what television programs you like, and it's very 10 years ago. Things have changed, but you know that time people said, well, I like this program, I like these books, I like this, and so on, and that was highly correlated with your personality, and that could be then used. At that time, they use it to predict who you're going to vote for. Turns out to predict who you're going to vote for is easy, but you could use it also to make predictions about financial behavior, and therefore to reduce the risk. And so, if you like, here is the promise of tech being used in finance, because if the essence of finance, if everything we do, if everything investment banks, venture capital, mergers people, if really everything that bankers do is to do with measuring risk, understanding risk, and so on, if we can instead use technology to help us understand that and reduce that risks, we are then able to do a lot more things that we couldn't do before. A really good example of that is insurance. So, so I'm going to drink some water. And actually, if you think of car insurance, it's actually a really good example. Car insurance for young people is an area that's really been transformed by technology. So in the UK, and I'm sure it's the same everywhere in the world, younger drivers are deemed as significantly more risky than other car drivers. And it makes sense. They're young, they're inexperienced, and also some young people a bit more, you know, they think they're never going to die, right? So they might, you know, they might be careless in the way that they drive. And so the premium for young drivers is insane expensive compared to old people like me. So, but not all young people are bad drivers. Not all of them are risky drivers. Some of them are actually very conscientious. And what we have here in the UK, which completely revolutionized this market, and I know it exists in other countries as well. I think Italy is the country where it's used most, but it exists everywhere in Europe and in the US, is something called, here we call it the box. I know some places call it the black box, but what it is basically a voluntary GPS that you install in your car that gives data to the insurance company all the time about how the car is being driven. Yes. So my son, when he got his license, he signed up for this thing. A small GPS came and it was installed over the battery in the car. And the insurance company and also he can see all the data all the time. So you can see, for example, whether you're speeding or not. And you can also see information about acceleration and braking, because that's really a good indication of someone driving really aggressively. And within, because in his case, he is a conscientious driver and he doesn't have much money. So he really was motivated to do well. So he drove very carefully for the first year, and the premium went from close to £1,000 to then less than £500. And then in the second year, it went down to pretty much almost same as what I paid, because he was able to prove using technology that he is a good driver. And so you really see the economics, if you like, of that market, that everything about insurance market was about understanding risk, pricing risk. It's all about averages. It was all about averages. So all the young people were put in one basket. And then the average behavior of that people dictate the premium, which was really high. You use technology to break that. You say, well, you don't need to average anymore. You can look at me directly in this case. And you can imagine now that these things will become, sticking with insurance, these things will can go everywhere. So I had a student who had a really successful insurtech company where they use satellite imaging and all kind of data, so really big data, if you like, to look at business insurance. And they look at the area and they look exactly how many people walk, they look at cameras, you didn't have to guess what the chance of a break-in is. You can really come up with a very accurate number for every specific business by looking at all the information around it, seeing exactly what's happening at real time, and consequently giving that shop or that business a business insurance rate that's based on the relevant information for that, rather than some kind of average of businesses in that area or businesses like you have that kind of level of risk. And I think a lot of it some of it will also come into health insurance. Health insurance is usually about averages and things. So at the moment, if you get any kind of health insurance, it's about, they ask you, obviously your age is important and whether you smoke or not is an important, but that's sort of the only two things. The big other factors that affect your health premium is if you're joining as an individual, or if your work is joining, if everybody's joining. And the idea is what we call adverse selection. So if you join on your own, maybe it's because you know something, you will need more medical care. But if you join everybody as a group, then the chances of that are lower, and so the premium is lower. All of these things, which are the basis of how the economics of insurance work, could change if I could wear something on me, possibly now in me, yes, that will constantly transmit information about things like my heart rate, my blood sugar, and so on. And these things already exist. It's certain, for example, this shirt can sort of automatically every few minutes kind of tighten up and slowly release and measure my blood pressure. Some kind of device can, like a watch type smartwatch or one of the Fitbit, can measure my heart rate at all the time. The one they're still struggling with is blood sugar, but there's a lot of advances on it. And so, you could, like the example I gave you with the car, the information would be transmitted, obviously all voluntarily. I'm only talking about a case where you agree to that. Yes, you say you want to do that. and when you choose to transmit that information, and so you can get a rate that's very specific to you, and then we can get rid of the risk, yes, or the unknown unknowns, and focus on really what's relevant to you. So there's tremendous changes that could be in finance as part of all these technology changes. By the way, with the health stuff, it's obviously, why would you do it is because it also can be good for you, because, you know, if something is wrong with your measurement, you can get immediate alert from your the monitoring thing saying something might be wrong with you, go quickly to see a doctor and so on. And as you know, with things like heart attack in particular, having a few minutes advance could save your life. So I think it really is an area that's changing. And so what we do in this course is we explore a lot of these. So we look at a lot of these examples and application in finance, insurance, and all of these, and we try and understand sort of where's the value and how these things might work. Right. I won't be able to take some questions, so I want to speak for just until about 2:15. Is that all right, Ali? So let me now ask you, so we talked about finance, we're going to talk about AI. I'm going to use this, use the chat again, and tell me, this is an even harder question. Everybody talks about AI. It's impossible not to hear about it. Can you try and tell me what your definition of AI is in the chat? Machine taking over, ChatGPT, consolidation of ATR, wow, leveraging of power, human intelligence, human-like intelligence decision tool, big data learning, ability of machines to think and act like humans, self-learning programs, it's a good one, several cognitive process, human-like machine, God, oh my God, there's a God, oh no, get rid of the routine work, invisible human, work smarter, algorithms, machine making their own rules, risk models, so thank you, that's what we talked about, initiating human intelligence, automated computing. All right, Terminator, I like that. Self-adjusting algorithm, excellent, that's a really good one, thank you. Fishes, Armageddon, okay, there's some, this is getting wild. All right, let's stop. So if you finish typing, Human 2.0, oh my God, artificial taking over workload and production of the tech. It's like artificial brain. Okay, wow. Self-learning. Okay, so there's a lot in it. I should be careful when I do it in class, I have 50 people. Now there's 170, so I have to be careful that I do it. Also, when I do it in class, I can, you know, it's easier to control. But thank you very much. Everything I need and more is here. Taking sort of I guess the first thing that comes out of it is that actually it's not that clear what it is. And in fact, there are some conflicting views on what it should be. And I think that comes really clearly in the text that you put here. Some people think what AI should do is understand how humans mimic or get better at human intelligence or cognitive abilities and all these things. So others don't worry about how people behave. Yes, it's nothing to do with that. It's about using the data and trying to learn from the data. And the key thing being what people here call self-adjusting or self-learning is that somehow it's not a simple rule. There is an ability of the program to change itself and to move on. And so and then they use the word algorithms is used a lot, which I quite like because I'm an algorithm person myself. But obviously algorithms just mean systematic rules. So these are excellent, and these are very good questions, so very good answers. So thank you very much for all of you for sharing that. It's a real mess out there now. I mean, I talk to executives and you ask them about AI, and some of them really what they think is AI is computers. Anything to do with computers is AI. Other people you talk to, and actually what they think, and ChatGPT didn't really help with that, is that when they think about AI, they think it's magic, something weird. Oh, look at that. Something that they couldn't understand. If they understand, then it's not AI anymore. And so you have these two extremes. So on one hand, it's anything to do with computer. On the other hand, it's just this thing that we can't even explain. And and it doesn't help. And the truth is, actually, there was never a clear definition of AI, and it's changed a lot over the years. And then it sort of died out. And it died out so much because I know when my first algorithm, and I remember I had that meeting in 2002, in January 2002, with this big hedge fund in Greenwich, Connecticut. And I explained everything to the guys, and I said, look, and this is how it works, this is how the algorithm works. And I said, you know, it's a bit AI in the sense that it's got this ability to self-adjust as things change. And I remember the head guy said to me, oh, don't say AI, it's a very bad word, don't use it. So there you go. So things, you know, fashions change. Now, if we look back, I want to just a little bit, that period, if you look at the research from that period, from the late 80s, especially the 90s, in AI, they really did think about human cognition. Can we mimic it? Can we teach computers to act like humans? And through that kind of figure, so there were a lot of psychologists, there were computers being taught the meaning of words, the meaning, grammar, understanding sentences, so they can analyze in the way that we thought people think. And what have we learned from that period is actually quite interesting. What we've learned from that period is that things that we thought are difficult, like flying an aircraft and brain surgery, are relatively easy to teach computers how to do. But something that we thought is really easy, namely speaking human language, was incredibly hard and in fact impossible to teach computers. There's books been written about at that time, sort of saying we can never solve that. So we did learn something about human cognition and human intelligence, that certain things that we thought are really hard are like following really good systems of rules, and certain things that we thought that are simple are actually quite hard because they involve maybe too many rules, which is difficult to program. By the way, and this is sort of something into algorithmic trading, investing is one of those areas where actually there's a simple set of rules that you can teach computers how to do, and maybe they will do it better than people because they'll never panic and they'll never sort of change their mind. They'll be consistent. And that's, if you like, the basis for algorithmic trading. So if you like, so that was, if you like, the previous iteration, sorry, of AI. And of course, everything now changed with, at least with big data. That was the big change, the big data and computing power, and something that you all take for granted now. And this is the idea that Google search complete your sentence. That was a thing, you know, that was an innovation. And the idea of Google was that actually to sort of understand human, what people are trying to search for, you don't need a really complicated model of cognition and what is the meaning of the word when and what is the meaning of the word at and how people think about it. All you have to look is at the last 15 million people who asked the same question and what they were looking for, because you know that, because you have that data. And so as the, you know, you can complete the sentence with huge accuracy because you have so much data that statistically analyzing that data is more accurate than anything we had before. And so if you like, that kind of brute force approach of data became the dominant thing in AI. And this is now, if you like, the new AI. How are we doing on time? Let me just say a few words about ChatGPT, because that's particularly interesting. And then I'll stop and take questions, because I'm already running out of time. What I'll say about ChatGPT is that if you're really interested in this, can I recommend, so what is ChatGPT? What is all these big LLM, these large language models? There are essentially three things. There are the transformer models, the transformer model, which is then calibrated using something we call generative pre-training. And then we use something called reinforcement learning with human feedback to finish it off. So, but it starts with something called the transformers model. And I really, really recommend that you look into that. This started about, is it 2016 or 17, the original paper. So it's a paper called Attention is All You Need. And if you are technically minded, please look at that paper. It's written by 3 people from Google, and it's about 10 pages long. It is mathsy, so you know, you need to understand the math. But that's really the understanding. And the idea is that, and that really is, I think, the eureka moment in cracking language, because what they say is that whatever I'm saying to you now, there may have been a word I used 2 or 3 sentences ago that is really relevant to what I'm saying now. And if you remember that word, then you'll understand what I'm saying now. And they call it attention. And they put certain weights on certain words, and that's sort of how everything comes from that. So Attention is All You Need is the original paper, and that's called the transformers model. It's a model of attention. And then generative pre-training is just meaning using the internet or using this huge databases that we have now to calibrate that model. How is all that relevant to finance? Well, you'll have to take my elective to find out. But I would say it is relevant. And I'll just finish by saying this last kind of a bit on it. I did mention to you that I'm involved in algorithmic trading since the early 2000s. People have been using algorithmic trading before. The reason is it's been used in hedge funds because hedge funds are a lot less regulated, because hedge funds don't take money from the public. They only take money from institutional investors and sophisticated investors, if you like. In recent years, things have changed. The regulator, after the last financial crisis, is a lot more positive about technology, hence all this fintech has happened. And now, in general, are positive about using computers, using algorithms, using AI to make decisions involving the public. For example, whether you get a loan or not, or whether your credit card is approved, and so on. And so we have an explosion, if you like, of applications of this technology in finance. So it's, if you like, a golden age now, and it's much harder to get a job in finance now if you have an economics degree than if you have a computer science degree. So things have really changed in the last few years. And also the way the regulator works has changed. If you go to the FCA, I work a lot with the FCA, they seem to only hire people with quantitative backgrounds because they realize that they need to understand this technology in order to regulate it. So, so this, if you, sorry, this is a kind of, hopefully give you a taste of the kind of things that we do in my elective. And I'm going to stop here. Thank you for your attention, as I mentioned just now. And see if you have any questions. Can we try? And if you have any questions, I'll try and answer them. And we have about 13 minutes left, so we'll try that.
Thank you very much. There are some questions on the Q&A.
Okay, I'll go to the Q&A. I'll go to the Q&A, sorry. Okay.
Please let me know if you don't have access.
The title of the report. Oh, so the first question is from, can everybody see this? Yes, what's the title of the report? Well, it's called the Committee of, it should be on my website. So I think that's a good place to start. So if you just look at my website in the business school, there's a link. Is this elective available for the first year full-time MBA as well? Yes, it is. The elective is, in fact, I'm doing it in 3 weeks' time in London. So that's for the full-time MBA. So we run it basically 3 times a year, once on the full-time MBA and twice for the EMBA. There's a question from Mainit. Very often we hear about fintech. What do you think about insurtech? How would AI impact insurance industry as much as the finance? So for starter, I do think of finance as insurance as part of finance. So we do cover it. And I think I did mention some of it in the beginning, and particularly around health insurance. Everything about health is about, well, sorry, try it again. Everything in insurance is about measuring risk. In fact, there's a whole profession, actuarial sciences, that is exactly what they do. And so they look at that. And here, if we can use information, as I said, to make better predictions, new data, basically, you don't have to guess, you don't have to estimate using on past, because you can have direct information, for example, by looking at satellite images of car parks, by looking at reports. You know, there's like police reports about crime in this area. If you have an AI that can read that and come up with a number that sort of summarize how dangerous or not dangerous that area is, you can then include it in your models. And you can see that many of these data can be relevant to the premium that you offer. So I think insurance is possibly the area that's going to change most. It's very, very, very dynamic. And so it's a fascinating area, and I really, really like it, and definitely coming. All right, I'm going to scroll. Okay. Wow, too many questions. I'm just going by the order I see them, guys. So I'm sorry if that's the wrong order. So there's a question from Fatima Nadim. Will this AI tool, sorry, the one to check personality and so on, actually take over the normal banking process in terms of reliability and satisfaction? Well, that's a really, really good question. So there's been issues with that. So when Facebook was starting, Facebook was going to launch their own finance, if you like, things, insurance, and they were going to use this information, and then the regulator barred them from using that. So there is an issue of fairness in terms of the tech giants have this kind of level of technology that the banks don't have at the moment. The banks are playing around with it. At the moment, mostly this stuff is used as opposed, not so much to do decisions, but to do nudging and to help you, so going forward, to help you save and so on. There's a lot of application that do use personality information and so on to better nudge you towards your saving goals and so on. Looking back, in other words, making credit decisions, whether you get the money or not, it's a little bit more tricky, and there's a number of issues with it. First, they're really worried about bias, that the system would learn to discriminate based on, so for example, if women in the past earn less than men, you can't anonymize this data enough, because these machines are so, they will figure out if you're a human or a man from what you're buying and so on. There's just so much data there that they don't know if it's a human. Sorry, they don't know if it's what a man and a woman is, but they'll discover that if you're in K17 or K16, this is this random forest method. It really matters. And why does it matter? Because in the past, women earn less than men. And so that was relevant. So there's issues around bias. There's also issues, and that's something we talked a lot about in the report, is that people want to, they call it the right to human. So you can, and it's a thing in the EU now, that you can say, I'm not happy with the decision made by the algorithms about credit. I want a human to look at it and to explain it to me. So for all these reasons, they don't really use that personality information yet for credit decision. But as I said, they're using it to go forward. And I think this is an area where we will see a lot more. As I said, it's people are uncomfortable with it at the moment, and it's mostly because it's been collected by the big tech in a way that we don't really understand. We don't feel like we own our own digital footprint. There's a lot of issues around it, but I think it will come, because it's, as long as it's done with consent, it could be a positive thing. Hopefully I answered this question. There's a question from Ronald now. I'm just going by the order. Is there any specific AI tool used in finance? Does it require prompt like any other AI tools? What is the prompt category and process? I mean, finance is a big word, Ronald. I mean, we do in the class, we look specifically at, for example, investing, which is one part of finance, as opposed to savings, which is a different part. And then there's AI tools using by companies to make a better understanding of their consumers. So there is different, lots of there's too many areas for me to answer it. It's used everywhere in finance. It's very explanatory at the moment. And as I said, there's an issue with what people call AI. Do you know what? Just to give you, I'm not being fair. I'm waffling a bit. Let's look at something very specific like ChatGPT or another large language model. Can that be used for investing, for example? That's a much more concrete, for asset management, that's a much more concrete question. Can we look at that? I can, in fact, I was at a big hedge fund conference in Zurich 2 weeks ago. I get confused, 2 weeks ago. And this is exactly what we talked about there. And the answer is, there are parts where it's used. For example, if your organization uses a lot of analysts, they look at reports and they basically summarize them for the investment people and for investment committees. Clearly, this is a fantastic tool to help you do this stuff better. Maybe even replace some of the more junior people you can, once you learn how to trust these things. That's another by the by, there's this issue, there's something called hallucinations. I don't know if you're aware of them, basically meaning when these models make up answers. So but anyway, assuming all these issues will be resolved, you can see that these models can be used to replace analysts or to help analysts. The other way they can be used is to do something called sentiment analysis. So sentiment analysis is quite big in finance and accounting, and this is where we analyze texts, for example, used by CEO, and we say from it what we think the company is going to do well or not. It seems to be using a lot of negatives and positives. So this is something we use, and of course, models like ChatGPT are an extension of existing of older models that were used to do sentiment analysis. Things like bag of words, Dis2Vec, if you know what that is, which is basically looking at a sentence, the sentence being, you know, we're going to do well, and measuring the distance between that sentence and the text that just been produced by the CEO or the CFO, and trying to deduce from that what to do. So this is possible. Where we don't see any immediate threat or promise of using large language models is to say, ChatGPT, invest the money for me. In other words, come up with a set of rules that will help me or that will make money. This is where we think there's still a long way to go, because these models have, I'm getting a bit technical, but they have a huge number of parameters. And so what they do is what we call overfit. I shouldn't really go there because this could be a whole lecture, but since I did, let me just finish that and we'll finish with this. And here's the issue, which maybe is a good food for thoughts for everyone before we go. And here's the problem, if you like, that it's in finance, in financial markets in particular, but in finance in general, it's really hard to predict the future. That's the truth. Anybody who's been in that business can tell you that. On the other hand, it's really easy to explain what happened in the past. Our brain is somehow programmed in that way. And so we think because we can explain what happened in the past, we should be able to easily predict what happened, what will happen in the future. And so we tend to fall in love with models that explain really well what happened in the past. But these models are not necessarily good models in predicting what will happen in the future. So I'm going to leave you with that. So it's a bit technical, but anyway, I hopefully gave you a flavor of what happens in this elective. As I said, I hope that you, well, you're probably more confused than when you came in, but at least you know what to expect in this. Yeah, thank you very much. I hope to meet as many of you as possible in person when you come to Oxford.
Thank you so much. Thank you, Nir. It has been very insightful. So thank you all for your participation today. If you happen to have any further questions, please let us know. Please send us an email. I will provide you with our details on the chat box. So please send us an email. We can set up another call. We can continue by email. We can, as I said, set a call to answer to any additional questions you might have. We have recorded the session, so we will also share these all the session with you afterwards. So thank you very much again for your participation. Thank you, Nir, and hope you have a nice evening or afternoon. Thank you.